Midday report or midday video just to update you guys. It's 11:49. It's been a little bit of a crazy day. Read the disclosure before I get going here. It's 11:49 on August 14th. So, hola. Wow. So, lots of back and forth. Listen, every trader has their own process. Everyone has their own set of risks. Everyone, trades what trades their strengths, so to speak. We talk about our portfolio approach, our tactical approach, which helps us identify the health and our risk tolerance in the market. When we're above the 8 and 21 day, we're sometimes in 10, 14, 20 longs. As things trend, as things trade higher, as we play breakouts, as we add on shares and take them off, etc. Then you're in the environment when you're tactical, meaning an unhealthy market. You're not sure what's next. Things are getting whipped around, and you try and be in, lots of cash in your active account, your swing account, especially if you're active. So, each day we've been pretty much taking it as it comes, depending on how the futures were. If the futures are up big, maybe shorting versus a level, down big, maybe buying versus a level. If something happens and things trigger, we're trying to buy or we're trying to short. I think a lot of people in the last week or so are getting a little whipped around because you're getting a lot of misdirection, and misdirection is tough on traders. So yesterday, the news came out that they're going to lift tariffs. We were very oversold. We needed something, and all of a sudden, boom. If you acted fast, you made money. Yes, it was a great day for me and for a lot of people because we were looking to buy for a trade, for a bounce, and then all of a sudden it materialized into a big up day that seemed as if it could have continuation. So if you played for a little continuation, and people are like, RedDog, why are you in any longs? We're below the 8 and 21 day moving average. What's the matter with you? You know what? We closed pretty strong. Some things look better than others. I had two longs. I didn't have 10, 15, 20. I had two that looked like they had a better than average chance of working out if we had some follow through, and we didn't. So what do we have to do? We have to change gears, or we have to salvage trades, meaning we were down 40 handles coming in today. So my mind was like, okay, I could buy maybe a little bit and try and see if we bounce and then sell what I bought in the hole and then trade around it and then lose less and then take a step back and trade as if I'm, not in anything to trade the direction of the day with my levels. I came in today, long Apple, long Amazon, and short Roku. Roku had a big topping tail, so that made sense. Apple and Amazon closed near highs and looked as if, hey, it's worth a chance if, even if we're only down like 8 or 9 handles, you can't tell you're going to be down 40. And this whole inverted yield curve, phenomenon, every computer, like I said this morning, is going to be rigged to sell because it is pretty much an indicator that a recession probability-wise should come. Who knows? Some guys say 18 months, 6 months, whenever. Who knows? Some areas are in one already, even though it doesn't look like it. So you have to be very careful. We're still up 14, 15% in the S&P. So it's not like we're at these like value levels and trough levels, and we're only 6, 7% off the highs. So not even 10%, where Germany's already almost 10%. So we're in this like no man's land. So we're testing things, we're using levels, and let's just get into the trade right now. It's 11:52. Let's see where we are. So first thing I have up here is Apple. So Apple, I said one of the strongest names yesterday. I did take it overnight, which I did. Okay, I'll see, if I could, how it handles 2 or 350. So I think right around, 928, I said I bought 203s, and that was a good level because within, I think 5 minutes, it was a 204.80, and I was able to sell some of that and make some money back on what I took overnight. And I didn't have a lot overnight. And then it did go as high as what? It went as high as 206.44. I think I tweeted again to you guys saying, hey, if you bought it at 203, I am now done with it above 206, 206, which it did hit 206.44, which is now your new point of reference, which is what's here. Okay. And now I have really no interest except for I would almost rather it just go red and fall apart just so the market gets hit and we just, stop the back and forth and get some downside follow through. I actually made some money short the SPYs. Ooh, how did RedDog make money short the SPYs? Well, let's go to, the indices first. So you go back to the SPYs. Basically this was your level, 287, right? 287 was the low end, 294 was the high end. It hovered at that 287 for a little while. So we were shorting it like 287.50-ish, and then when it broke 287, added to it and made a little bit of money, but I wasn't buying that. Now all of a sudden here's a low, here's your 200-day EMA, here is 282. So it's in no man's land. We're not selling resistance, we're not buying into support. It's now below 287, but it's above this and above even, with all said and done, we're still above last week's lows. So we're not that oversold. We're like minus 45. We were minus 70 last week. So you can't just buy things because you think you can be bailed out because they're oversold. And you probably can't buy some things because you think they're cheap because S&P's up 14% and, we have lots of stuff going on everywhere. But anyway, so what was the low this morning? The low was 285.41. It's 285.87. If the sellers want to keep control, meaning less choppiness, which would be better, keep it below this and close this, close this week. If they want to screw with everybody, including the shorts who probably covered on this day yesterday, then all of a sudden they close this back above 287 and just keep it in this choppy range. And here we are, August 14th. That could happen too. I'm actually still short some SPYs. I have a stop at 287 because I have to leave for a portion of the day just to see if we continue to the downside. The Qs are just starting to, break this level. They haven't yet, so they haven't really given way yet, probably because of the strength in Apple. So anyway, let's go to Amazon now. Now, Amazon was a little different story. Amazon, I was a little bit more worried about. It's been more broken. I did take it home long yesterday. I'm like, I hope the 1798, 1802 area holds, and it was already down to like 1790. And printed like 1788 fast, and it went up to like 1791 while Apple was like rallying $1.50. I'm like, oh, hopefully I could sell some of this at 1804, and then it didn't rally at all. So let's go to Amazon. Amazon broke to 1798. It's now below the 1778. So I'm actually happy about my losses at Amazon because I sold it. Where is it now? It is 1766. I sold it 23 points ago. I would have lost double the amount that I lost. I lost 19 points, but better than losing this. Now, how could you have navigated it? So you just say you go to your, your one-day chart. So you have to be fast. Okay. So basically, this was, what I sometimes you can call this just say. I was a little tight about it just for the whole theory of it. So the low here was 1788. It tried bouncing off it. So this was what I would call a 5-minute reactionary low. Like you have a low, okay, put 1788, it's back above 1790. It was at 1826 yesterday. You buy a little bit to see if it could fill some of the gap. So it's going sideways, going sideways, going sideways. Couldn't rally at all. Broke this, so I'm like, I'm out. I think I sold it at 1788. And I was like, damn, tweeted to you guys, that's a big loss. I said, what? Is it 20 points? No matter how many shares you have, it's a lot. So anyway, I'm kind of happy that I did lose that. But I didn't, navigate it all the way down to here where it's 1768. So about 20 points, right? 20 points less or lower. So this was different. Okay. But this also, just so you see how things look different, this is different than Apple. So I'll show you how to trade around it. Okay. Apple opened lower, put its 5-minute low in here, which I actually didn't, I anticipated because I thought that 203. And, during the time that Amazon couldn't rally, look at this move. Okay, and I was just happy to, to salvage it. I only took home tier 1 overnight around 208.50ish, which I told you guys 208.60, which I tweeted to you guys in the afternoon. So at 203, I'm like, all right, let me double up. So I took more than I had overnight, so I made some of it back. And then if you wanted to, draw a line here of this ascending channel here, really, if you said I'm going to scale it or trail it because maybe it actually goes green, who knows? This was my first move where I trimmed some, I held it, and then I just got rid of the rest of it into here, and then it broke, and now it's, it's starting to fade. So still a big gap, but this was a better salvage to trade because there was more liquidity, more of a buyback than Amazon, and it was actually acting a little bit better than Amazon yesterday. So that's why at Amazon, I didn't buy more. I just sat hoping we would get a reprieve, and we didn't. So that's how I handled my 2 overnights. But then Roku helped. Why was I short Roku? Because Roku, had a topping tail yesterday, a really nice one. I targeted this as stretched potential topping tail. I took it out short, which I did. It was a RedDog reversal sell too. You didn't even have to anticipate this move up. You could have, shorted it when it went back below the prior high. That's a RedDog reversal sell. So if you want to have a lesson here, oh, RedDog, what's a RedDog reversal sell? Well, here you had 1 day up, 2 day up, 3 day up. It pushed above this 136.50. So anyone who was still short got squeezed, put a high in. So let's put that high in here, 142. And then you didn't even have to like cost average it up. You could have said, I'm waiting for this RedDog reversal, something like this to trigger. And then, PS, It went back below. It was again 7 points in the range. You're waiting. I would rather have seen you short versus a high like I did. Because when I tweeted to you guys, I'm like, it's at 139. I'm short versus a high. That's $3 worth of risk, and I'm gonna let it play out. And yesterday I went to get my son, so I wasn't sitting in front of my screen. I had $3 of risk, and I knew that after 5 up days. So anyway, it didn't give you a really chance to press yesterday's lows, but now it's into my target. I did cover it all. Yes, it can see here, but I was just happy to make a nice day-and-a-half trade and, move on. So those were the three positions. Those were the three different rationales, the three different thought process that maybe, again, it's 11:59. A lot of things will change perhaps the rest of the day. Who knows? But again, I was in two positions because it made somewhat sense. It was a decent hand. It wasn't a great hand, which is why I wasn't in tier 2, tier 3. It was decent to try. And, I'm glad the way we maneuvered it. So now if you just go to the other charts, there's a lot of broken charts here. It's Facebook. Look at this. Remember, I said it's got to hold this, otherwise get out of the way. I don't think anyone was in it anyway. It's been weaker. Now it's coming into this prior low area. So what is this low now? This is 180.11. So just if you guys want to learn like terminology again, 180.11. So this is the morning low, okay? It made probably a 5, 15, 30, 60-minute low and kept making lows. Hopefully you didn't buy it the whole way down. So this is this low versus this, and this is 179.34. And this is the 200-day. So this is a broken name, and I did not touch it the last 2 days just because it's not worth it. If anything, some guys might have made money short once it broke below there. And now you'll see, does it put in a semi-double bottom here, or does it have to see the 200-day? Netflix also has been a broken name. I said it either has to hold 308 or get out of the way, or maybe even look short. And Netflix traded below this 305 with authority. Okay, broke below 308. Here's your 305. That was another spot. If you thought fast, I know guys in the VTF were talking about shorting. I didn't trade it because I didn't want to be involved in more things. And now it's kind of in no man's land. You have, this prior low here. It's below this. Got rejected into there. It's bearish. It's riding the 8-day down. Here it was riding the 8-day up. What's RedDog's rule? When you're above the 8-day, you try and be long and try and ride it. You try and use a tier system. When you blow it, you're out of the way. You test levels. You look for H-cell setups and maybe, RedDog reversals here and there. And now this is definitely still very, very weak. Twitter, I'm not in it. I haven't really traded. I think I got out of it somewhere here. Yesterday, again, a little bit of a trap. I almost bought it at the end of the day. I almost bought a few things saying, these things look okay. I'm like, nope, I'm going to Italy friggin' on Friday. I'm at the high of my quarter of my year. I'm not just getting sucked in because we had one up day. We know a bearish environment with lots of headline risk. So that's why I took the 2. But anyway, now if you're still in this needs to be your stop. This breaks below here, then all of a sudden this level could happen, in a New York minute. So I would be a little careful here. Not a lot of things are holding up. And if we're going to be testing last week's lows or testing 10%, 10% off highs, this thing is going to be filling this gap. So just take a little care. Remember when I loved it in here, same thing wound up happening. Came all the way down, grinded its way lower. So this is why I'm not sitting there and holding it. What's Snap doing today? Snap also, it's better than some other names, but got to be careful here. The 16-ish is pretty big. If that doesn't hold, then all of a sudden 1552 could happen pretty darn fast. It's below the 8-day. It's above the 21-day. Definitely vulnerable. A lot of guys said, RedDog, why aren't you in AMD? You liked it, a week or two ago. I'm like, because it didn't hold 33. Why? Why was that important? Well, right here, this low was 33. If it was going to stay special and perhaps get above this, I thought it needed commitment up here. It broke, so get out of the way. So this day was a great day to get out of the way as it broke 33. It lost its upper commitment. And now look at it. Wow. Fill in the gap. It's just broken. So many broken things. So you better be careful out there. I know yesterday if you were short, I know a lot of guys like, yeah, I can't believe they got me out of my shorts. And then today happened. That happens. So, misdirection's tough. There are some guys that I don't care. I'm just shorting everything because this environment is very bearish. Inverted yield curve means recession. Stocks below the 21-day. Washington, I'm not going to talk about that. The world is slowing. Argentina just dropped 40% in US dollar terms. Hong Kong's crazy. I'm just shorting. If that's you, then you have a thesis. You have conviction. You can get run over, but then you stayed short, yes, and maybe added more, and you're making great money today. But if you're tactical and you're trying to net money and, not be in harm's way. You got to do it a little bit different. So that's that. Why aren't I talking about cloud names? Just because, oops, this demo version of install. All right. I don't know. Let's see. Twilio looks like it's about to retest this 122.11 again, so take care. Coop, what did you do? Broke to the downside of this, this wedge pattern, so it's bearish, below the moving averages, very choppy. What's some of the IPOs doing? Beyond, coming into this 160. Yesterday showed some relative weakness, so hopefully some of you guys got out of the way, and now, it's definitely vulnerable, but in order for the pickle jar to, to really open up, it's got to get below this 160. Let's see what the spiders are doing again as I'm talking. All right, that's good, because I am short the spiders. Hey, where are the spiders now? All right, coming into 285, and then this is the 200 day. So could see that, but again, broke below this. It's above this. No man's land. And I'll tell you, this is 10% move off the highs. Anyway, interesting times. Let's go back to the S&P real quick. I might as well, while we're here, screen save a shot and post it just to show you how I do it. So here was your 2873 that broke. Here is your 200-day below. This is pretty insignificant, except this held, so maybe this will be some support. And if that doesn't hold, then this happens. Let's save this. So look how I do it. I go save, just so you can see how real time it is, because every morning it's really real time. Save image, and then I go save as, and then you'll see me go S&P 814 intra, and then I'll put some language around it. Listen, when I post charts in the morning, look at the charts. I always look at my language, because those are the thoughts. So now that's saved. So with that said, this is broken. In order for the sellers to stay in control, 2873, it should stay below. I would think that if you had anything overnight, you tried to salvage it. I salvaged mine. If you're quick and you thought you could press shorts below here, and you did so, great. The stocks like Facebook, that area was 184. You still could have made 3-4 points. I know Netflix opened down, and I was I wanted to short it yesterday and didn't. You could have still shorted 305. So there were definitely ways to press if that's what you do. Same way I could buy things fast when they're up. I'm not good at shorting things fast when they're down. I just stay out of the way and wait and sit in high levels of cash in all my accounts. But I did actually short some spiders because that had liquidity and I can control. So at this point, just take it easy. If you're frustrated, go to the gym. I'm about to go to the gym now. It's 12:07. I have my stop in the spies for the short side, and we'll see what happens next. And just if you're a long-term investor and you have a 401k and you have a 529, you need 25, 30, 35, 40, don't sweat it. Put your money in every single month. Okay, my wife was 32 years old in 2006 when she started her 401k, and she's like, oh, what do I do? We're getting a little toppy. I'm like, you're 32, it doesn't matter. All of a sudden, financial crisis happened, and she's like, oh my God, you're an idiot. I thought you were in finance. I'm like, okay. Just keep putting your monthly flows in. By 2009, after the bottom, and we went up. By 2010, she had a phenomenal average cost. By, even now, that built her 401k. If you happen to be 75 years old and you don't have a job and you want to, just take your 401k down from 90% in equities to 60% and raise cash, because maybe we do see a 10% move off highs or more, that's a different story. That's a different time frame. So it's all about your time frame. I'll see you to recap. Have a great rest of the day.